Tesla investors everywhere are seeing a massive narrative shift in understanding just exactly what Tesla's business is. First, Morgan Stanley's Adam Jonas is out with a new note saying that Tesla losing the $7,500 EV credit in the US is already priced into the stock, but that the company's leadership in embodied AI and autonomous technology is not. We'll look at what makes up their $310 base case and their $500 bull case. Second, to our dismay, Jim Cramer is very bullish on Tesla. And third, we'll watch a video of Tom Narayan of RBC Capital, who's saying that self-driving justifies Tesla's market cap more than the car sales. I've got Hans Nelson joining us. We're going to watch these videos together. Welcome, Hans.
Thanks for having me, Herbert.
So check out Hans on his YouTube channel and his Twitter on his X account as well, Hans C. Nelson. So let's start with Morgan Stanley. They dropped a new note. And what they're saying here is that he believes that Tesla losing the $7,500 EV credit in the US might already be priced into the stock, but the company's leadership in embodied AI and autonomous technology and potential policy accelerants may not be. So that's a little surprising that they think that the policy accelerants may not be yet priced in. What's your thoughts on that comment?
Well, yeah, I would agree that it would be surprising to me if policy accelerants weren't priced in at least somewhat. And, he could be correct. So there's a couple ways to look at this. And one is just that maybe the discount that we've had based on lawfare against Elon and Elon's companies is where we've seen this massive run in the stock come from, that we're re-rating from roughly the $250 range to the $320 to $350 range, just based on the discount that the market was giving to Tesla based on how hostile the Biden administration had been in the court system. And maybe not the administration specifically as much as just the mess of regulatory agencies that had kind of been given open season free reign. So if that is true, then perhaps the policy backdrop is not as front and center in investor sentiment. But I personally think it's probably a mixture of both. I think that a portion of the move that we've seen over the last few weeks is removal of that discount, but I think another portion of it also is the assumption. I've heard this from a lot of investors. So I have a hard time believing it's not part of the calculus, that they think, wow, Elon's proximity to Trump and Trump's plans for the next 4 years just make it a lot more likely that they're going to get the policy support, the regulatory support that's necessary in order to execute on their goals. So it's a very rosy idea for Adam to say that that's not priced in. I would just personally be surprised if it's, maybe not fully priced in. That's possible. Maybe they've only priced in 30% of the effect or 40% of the effect. But I would say the chances of 0% of that effect being priced in are also close to zero.
There you go. I agree exactly what you're saying. So first of all, the $7,500 EV credit, that we're going to lose that. I think only the retail community that's on X actually knows about that. The vast majority of investors out there who don't even know anything, it's just not something that they're worried about, honestly.
Well, and I do think that there is an argument to be made that the removal of that incentive actually is bullish for Tesla. One of the things that we saw in the Q3 earnings call was their continued ability to reduce their cost of goods sold to the lowest levels ever in the company's history. And I think that gives confidence to the investment community that they're going to continue to drive those costs lower and lower over the next 10 years. And so if this support is not given to all their competitors who are already struggling to control their cost of goods sold, well, that makes all of their competitors even less able to compete in the long term. And so it's basically just a seeding of the overall EV market to Tesla and then whatever Chinese companies are able to do as well. So if you take that into consideration, and maybe you do say, okay, well, there's going to be less penetration of EVs in the overall auto market, that now ICE cars are going to kind of rebound, and we're going to expect we're going to lower our projections on what the overall penetration of EVs are into the global auto market. But you say that, well, Tesla's share of the EV share is going to grow. You end up basically in the same place.
Yeah. Um, Jeff Lutz was saying that if they get rid of the EV credit, there's very likely they'll replace it with a Made in America credit. That makes sense. Makes sense. So at the end of the day, that's going to be a wash. But the idea that the AI,
Or a not made in America big fat tariff.
yeah, probably both. That's the point, right? Incentives and disincentives. And then guess who's going to benefit the most quickly, even across all American car companies? It's going to be Tesla. So this idea that
I don't. I think that point that you just made, we need to double click on that for a second. I don't know how much this plays into the overall market's understanding of Tesla, but one of the things that we saw with Tesla specifically was their ability to be first and best at capturing IRA incentives.
Right.
So the speed with which they are able to adjust to the overall market environment suggests that they will be the first ones to adjust the best to whatever, like we're about to go through a big fat change. And who's going to take advantage of that big fat change the best? Well, it's going to be the one who can do it the fastest. And that's obviously going to be Tesla. So, like I said, I don't think this is a specific factor that many investors are thinking about. But when you step back and look at it from a 1,000-foot view, it is obvious and it's important.
Love it. Okay. And then the idea that AI, autonomous technology, is not yet priced into the stock, I agree. And you and I said we both agree that it's probably a little bit already in there. But I also think that it's like it's one thing that Trump is now working, Elon is now working with Trump, so then there's a bump. But then once you hear about these policies being put into place, every time something becomes even more crystallized, more clear, there'll be a bump. So and then the other thing is embodied leadership and embodied AI and autonomous technology. Well, you and I both agree that that's the big thing that we agree with, and many investors still aren't going to give Tesla that until they actually see real dollars. We just saw, a Tesla institutional analyst yesterday say, it's too premature to even talk about Tesla achieving autonomy and to give it a bump today until it's physically there. So,
yeah, I just don't think that makes sense at all from my standpoint.
Right.
We just saw today a drop from Figure Robotics showing their Figure 2 robot doing. Now, it's not actually on the line in BMW. I'm sure that BMW does not want video of Figure 2 robots doing work in the BMW factory to be displayed publicly. So they recorded what the Figure robot can do at the BMW factory in the Figure headquarters. And like it's doing real work that real humans could do, and completely end-to-end autonomously with a fleet of them. Like there's multiples of them. That demonstration, we've been hearing rumors that we were going to see something like this here for a few weeks now. I think that it is one of those kind of mic drop moments that to anyone who's watching and paying attention, you realize this is happening and it's going to change everything. The other big thing to take into account is like, okay, we've got a bunch of startups here in the United States specifically, but the West more broadly, that are focused on figuring out the software side of how do we make these robots do this. The hardware will follow. The big challenge is software. Then you go to China and you look at what Unitree is doing. Obviously, they've got great humanoid hardware and software as well, but I think they're going to be basically following the West on the software side. But the advantage that they have is scale and cost. If you compare the Unitree B2, which is basically their knockoff version of Boston Dynamics Spot Robot, you can get it for, tens of thousands of dollars, and it can do most of what a Spot robot can do. It certainly is way more, value per dollar than a Boston Dynamics Spot robot. How are they able to do that? Well, it's because software is not that hard to copy, and they have the supply base there in China to be able to produce these things at scale and bring the costs way down. And really, I think that fact, in an environment where the United States and China are fully engaged in Cold War 2.0 right now, means that the US has no option to not participate in this artificial intelligence powered robotics future. We have no option to just sit this one out and stay on the sidelines. We have to be all in on this thing. And who is better positioned to capitalize on that than Tesla? And not only, Tesla has the ability to manufacture at scale. They obviously have access to the entire supply base that's in China already because they're also in China. But they also have the best ability to develop a supply chain outside of China. And Elon's goal and stated mission that we want to have localized supply chains wherever it is that we do our manufacturing, so that we have an anti-fragile company. And so I think he's going to be one of the best people to do that, which is going to be incredibly important. He's obviously got a seat. Like, who has negotiated more effectively with President Xi in China than Elon Musk?
Yeah.
I mean, maybe you could say Trump has, I don't know. But so for him to have the type of relationship that he has with President Xi and now with President Trump, he's in the perfect position to navigate this incredibly harrowing and complex Cold War 2.0 relationship that the United States and China have while doing business in both countries. And then assuming that he has the ability to manufacture millions of humanoid Optimus robots, whether it's in China or outside of China. And then you add to that the last piece of the puzzle, and that is a world leading humanoid AI hardware and software brain capability. Well, then it's pretty much game over. Like, there's no one that is going to lead this humanoid robot workforce revolution more than Tesla. They're going to be, in the position to be the Apple ecosystem of this entire brave new world that we are launching into. And Elon wants to navigate that whole process while keeping humanity as a whole from descending into global thermonuclear war. And I am excited that he is going to have the position, both politically, but economically, business wise, and then technology wise, to be able to be the tip of the spear.
Yeah. So the more that he becomes the AI ambassador for the government, and then we haven't even started. We've been hearing moves in autonomous, but as soon as we start hearing about the commitment that the U.S. government has in robots, which, like you were saying, it's a must. They have to do this. But once you start hearing that, that will be that's not priced in, and you'll start seeing that priced into the stock. So let's take a look at Morgan Stanley's forecast. And Adam Jonas said that our Tesla forecasts through 2030 do not include any production of Cybercab. That's why they have a $310 price target. That's their base case. So here's the $310 base case. You can see that blue is Tesla Auto, yellow is Tesla Energy. I like that their energy is so close to auto. That's great. Tesla Mobility and ride sharing, small bit, but this is 2030. So I think it's going to be much higher by then. And then you got the Tesla Network Services, and then you've got EV powertrain third party. That's their base case of $310. So small for all that. Can you imagine? You're doing autonomy, you're doing powertrain third party, you're doing a ton of energy, you're doing this Tesla network, and yeah, it's still $310. I what? And then their bull case here is $500. Okay. What do you think, Hans?
Adam is a strange cat. I just have to say, he he wants to think pie in the sky, and then he's in this like ultra conservative financial price target straitjacket that is like, hey, they're going to do these things that are going to revolutionize the world, and it's only going to be worth $2.
Yeah, I know. It's weird.
And yeah, I mean, that's just what his notes feel like almost every time. So, I don't know, like it just makes you kind of discount the financial side of his notes, like the value of the financial side of his notes to almost zero. Like that's,
Well,
either they succeed and it's massive, or they don't succeed and it's overvalued. Like this weird in between place where, I don't know, it just doesn't make sense to me.
No, I think I wouldn't say that. I'd say that his research is what's really good. They do deep dive research. It's fantastic. But of course, what did you straitjacket is like the right word, right? The price target is a totally separate. They have to like keep it really,
it's basically
because
how do
it's how they're measured. It's how they're going to get paid.
Math.
That's how their customers will look at. But their research is really the true story. Here's the next guy, Jim Cramer, and he has no research. So just don't believe anything he says. But boy, it's scary because he's now bullish on Tesla. So let's watch what he's saying here.
Some stories are just too good to be true. And that's how I feel about the possibility of a federal proclamation that leads to a nationwide rollout of fully self-driving cars. Tesla stock was up again today because we're getting reports that President-elect Trump, who is an avowed climate change denier, has cast his lot with Elon Musk to develop national self-driving vehicles. It's pretty clear that Trump doesn't see the need for electrics. In fact, he wants to end any subsidies, including tax credits for manufacturing them. However, he did state, I'm going to quote here, "I'm for electric cars. I have to be, because Elon endorsed me very strongly," end quote. A little transactional for me. Look, I'm not against owning Tesla. You know that. I just think that this is a bad reason. Elon Musk tells a very compelling story about full self-driving as well as solar robots, all wrapped up into one stock of a company that happens to make vehicles. But the idea that the White House can somehow allow self-driving cars everywhere with the stroke of a pen, that's just plain fanciful. First, our country simply doesn't work like that. We have state and local governments with tremendous power to block anything. I remember when I was going to be able to take a self-driving taxi from downtown Phoenix to Glendale, the home of the Arizona Cardinals, a couple years ago for the Super Bowl. It seemed so simple, except Glendale didn't allow self-driving vehicles. I was incredulous, but the municipal government of Glendale was able to block us. Second, you might think it's natural for Trump to just declare the federal interstate highway system a self-driving zone. But you know what? That's meaningless, too. Think about it. How do you get on the interstate highway system? Other than a few municipalities that may be designated on some map someday, it's catch as catch can. The feds can't control state or local self-driving laws. If they try it, those municipalities will sue the Federal Highway Administration, and they're going to win. There was another time in this country when a president might have been able to do something about this. In the 1950s, President Eisenhower planned and executed the interstate highway system. But he did that for national defense reasons. In those days, we had a Cold War with the Soviet Union as an overarching imperative in our nation, which made the Interstate Highway Act a much easier sell. Still, I like the concept that there's what Barclays calls an Elon premium. To me, Tesla deserves the premium. Musk has no doubt influenced the president-elect to scrap the $7,500 clean vehicle credit, which will make it much harder for legacy automakers to ever compete with Tesla. We're going to hear from Ford and GM CFO at a conference on Wednesday, and we'll learn how their electric divisions can handle the end of those tax credits. I believe GM can handle it, but Ford, well, they may be stuck in neutral waiting for the warranty issues to dissipate, if they ever can.
Yeah, pause him there. What do you think about everything he just said?
Yeah, when you listen to him, he sounds a lot less bullish than, there's a lot of skepticism that he's saying there. And I would say that that's good, because I definitely don't want Jim Cramer to be too excited about Tesla. That is a little bit concerning. I think he underestimates, though, if we have basically public support really turned towards the adoption of autonomous vehicles, that's really important. And, politically, that will be the thing that matters. That, if you're if you've got a city or at the state level, whatever level it is that you want to look at, and the majority of the constituents in that area want that legislation to be passed, and I think it is going to be passed. And so I hear the argument that he's making that the American regulatory system is hard to navigate, that there's you can't just issue some proclamation from on high and expect it to be adopted everywhere. But I think if we win the safety argument conclusively with data, that all of those objections that he had to the ability of autonomous vehicles to be rolled out nationally basically just go away. Now, will it take a little bit of time? Sure. But the federal government taking some sort of a leadership role in creating a framework that is easy to adopt, like that's not necessarily issuing a proclamation from on high on exactly how everyone has to do this, but it is basically giving political cover to people who then, like, they have some constituency that says, hey, yeah, we want this to be able to move forward more quickly. So I think it does accelerate the adoption if we have something like that at the federal level. So I would disagree with him there. Agree that the Elon Musk premium is important. Like, he can do things that other people just can't do. But in all of it, he didn't really identify the most exciting and important piece of the Tesla story in general, which is still the humanoid robotics move. And I think we're getting a lot closer to that than most people think. And I think it's going to be a lot bigger than most people think. So the fact that he's missing out on that makes me feel a lot better.
Exactly. Okay, good. So thank you for that. Let's watch the next video here. Tom Narayan of RBC says self-driving justifies Tesla's market cap more than car sales. Let's listen to what he's saying here.
It said that the Trump administration is planning to ease federal rules on self-driving vehicles. Now, this follows news on Friday that Trump's team is also reportedly planning to kill the $7,500 tax credit for EV purchases. So joining us now is Tom Narayan of RBC Capital Markets. Tom, it's great to have you on. Let's start right there. What's going to matter more for Tesla and for the vehicle market and any of these AI plays that might be attached to autonomous driving? Is it going to be a different regulatory landscape for autonomous vehicles, or is it going to be taking away that tax credit? What's going to matter more?
Yeah, it's going to be giving less regulatory restrictions on robotaxis, definitely. Federal restrictions was one of the big reasons why GM stopped making its origin purpose-built vehicle, right? That allows you to make a vehicle without pedals and steering wheels. So you need that federal deregulation, if you were to call it, a policy framework in order to allow for that. And that's what the Tesla Cybercab is. Why is that important? It cuts down a lot of costs, right? Currently the competition is, Waymo. You guys talked about that. It has pedals, steering wheels. It's another car company making the vehicle. Right? So if you can make your own vehicle at lower cost, doesn't have steering wheels or pedals, you can bring down the cost. And Tesla's argument is they can actually gobble up market share. And if you look at autonomy and AI, et cetera, that comes at a much higher multiple. You have $1 trillion+ market cap for Tesla. Are you going to get there with an auto business for selling more cars or through AI autonomy, right? So autonomy is the way they can justify that market cap more they can from selling cars.
So it raises the question. Tesla bounced again today, up more than 5%. It was one of the best performers in the market. It's up more than 50% in a month. We have seen shares also today, to your point about Waymo, of Uber under pressure. It doesn't seem like this is a zero-sum game. Anybody who's tied to these regulations or exposed to these regulations, I would imagine, is going to benefit. But looking at Tesla specifically, are you surprised to see how much the stock has run in just a short period of time?
Yes and no. I think post-election, I was somewhat surprised, especially with the move on the $7,500 credit being cut. I actually think that's a negative for Tesla. I know there's a narrative that eliminating that credit is good for Tesla because it can compete better against other EVs. But the reality is in the U.S., penetration for EVs is only 8%. Tesla's real competition is Toyota Camry, right? Not the Chevy Equinox. So I actually think that credit going away is actually a negative for Tesla. But the reality is getting federal deregulation on AI, or specifically on self-driving vehicles, is a huge positive, assuming it all happens, right? Remember, this is all like in the, we don't know the details here, devil's in the details. But just because, my robotaxi valuation is 44% of my whole price target, FSD is 33%, right? So like the sky, not the sky's the limit, but you get the idea, right? Like we're talking about huge multiples. And so that deregulation, I'm not surprised.
So Tom, the stock has moved about $90 a share, I think, since the election. How much is Tesla now a Musk and Trump stock? It was a Musk stock before, and that had its benefits. And right now, Elon Musk and the president-elect seem very much aligned, and it's moving on some of this policy stuff. But how much risk is there for investors? How much should investors keep in mind the possibility that at some point these two guys, who have been known to be a little erratic, disagree on something? And what kind of an impact could that have on the stock?
Yeah, and I've written that I thought that the move after the election, a lot of that move wasn't really based on fundamentals, right? It was based on a maybe this could happen type ideology. But I do have to say, though, that something like deregulating, robotaxis, autonomy on a federal basis, it does matter. And that's also something that once a genie's out of the bottle, it's hard to kind of put that back, right? So it's a mixed answer to your question. I do think certainly like it's not completely tied to a president-elect, but certainly having policy that's a tailwind for you most definitely helps, right? So it's kind of a mixed answer. But I do think, like, if you believe in robotaxis, you do believe in autonomy, FSD, if you believe in it, having deregulation kind of sets everything in motion to achieve what this company wants to achieve.
Okay, so that video was, in his interview was on Monday. We're doing this interview on Tuesday. It's probably going to publish tomorrow. So you saw that his price target is 313. He talks the big game. He says, "Oh my God, this is going to be big. 44% of my price target is, I believe in autonomy. This is going to open it up 313." So it's just another example.
Apart from that, though, I really do think a lot of his commentary is excellent. I think one thing, or maybe two things that I would add. One of them is that he didn't mention the discount that I think Tesla had on it just because Elon was in the crosshairs of the fourth branch of government, the administrative state. And, I think that overhang is lifted. So we mentioned that earlier in the episode, and I'll just say that that's one thing that he didn't mention at all in his interview that I think is an additional factor. And then the other thing on his Trump Elon Musk commentary is that Elon and Trump both need each other, I think, a lot. And I don't expect them to get along just incredibly well for the next 4 years. I do think that we're going to see some of the big ego headbutting that you would expect between two figures like Elon and Donald Trump. But I think that they will end up being able to work through most of that at a pretty good level, and that overall the relationship is going to be overwhelmingly mutually beneficial for both Donald Trump and for Elon Musk over the next 4 years. And so while I think that, we're going to get some, there's going to be some noise, there's going to be reporting around things, there could be some arguments. I don't think it's going to devolve into some sort of a thing where then Elon is back on the hit list for, a whole bunch of federal agencies again. And, if you can take that off the table, well, then, it certainly couldn't be any worse than it is right now. Like, it's still a positive direction. And then, like I said, I think that in an environment of Cold War 2.0, I think Elon is an incredibly important figure that, and I think that Donald Trump knows that. And then I also think in reverse that Elon knows that Donald Trump is an incredibly important person at this point in Cold War 2.0 to kind of shift the tides, because we've been going in a very negative direction in that competition for a long time. And we've got to start moving with some decisiveness and some pep in our step, because if we don't, we're really going to be in a very terrible position, 5-10 years from now.
Thank you. Okay. So we covered Morgan Stanley, Jim Cramer, Tom Narayan of RBC Capital, all of them saying pretty well now that they're believers in autonomy, that they see deregulation as a critical catalyst, and they're talking about it. We haven't seen them raise their price targets, but that always follows, That's the critical things, narrative shift, and then these things follow. So it's just good to follow these guys as we go along here. Thank you so much, Hans. Follow him. Follow Hans on his YouTube channel and his X account at Hans C. Nelson. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.